Hi there, I found a new investment idea, which is international flavors and fragrances. And this business is paying a dividend of over 4%, 4.6%. And if you look at the stock price, you can see that has declined by over 50%. I got this investment idea from Charlie Munger. I was reading his book and he was talking about this company that will do well in the future. So I said maybe this might be a good investment. And when I saw this decline of over 50%, I said I have to analyze this business because it might be a good investment or not. Anyway, the current level, if they can improve the business, the stock price may rebound. So in this video, I'll find out the outlook of this business and at the end its fair value, whether it's a good buy at the current price or not. So let's begin. You can see in this image the analyst estimates, the past revenue and the future revenue. As you can see, their earnings have declined a lot in 2022. They had a loss of over 1.8 billion, and also the free cash flow was with minus. That happened because of an impairment. They paid too much for the acquisitions and they had to write that down. But as you can see, earnings are expected to improve from a loss of 1.8 billion to a profit of over 1 billion, around 1.2 billion by 2027. So that's great. If that happens, the stock price will rebound. And of course, also the free cash flow is expected to improve. The estimates are expected to be even higher than the earnings, so that's great. And also the revenue is expected to increase a little, to 13 billion by 2027. Plus, as they are paying a nice dividend around 4.6%, the question is this dividend sustainable? Well, if you look at the estimates, you can see that the dividend is expected to decrease in 2023, this year, and then to increase a little, to $3.46 by 2027. So that dividend may be sustainable. You will get a dividend over 4%. Of course, by 2027, that dividend will be around 4.8% at the current price. So that's good. If you can get this dividend, plus an increase in the stock price from the current level, your return may be great. Now, if you look at the last quarter results, you can see that the revenue has declined quite a lot. The total revenue declined by 11%, and also their operating profit by 42%. So that's a bad sign. If you look segment by segment, you can see that two of their segments have declined by 9% and 3%, and the other ones have increased a little. The first two segments are focused on food, and the other two on consumer fragrances. As the name suggests, they create all kinds of flavors and fragrances, which are used in many products around the world. They also have customers in many countries. And they're trying to improve their business, to focus on key global accounts, to improve their efficiency, and focusing on the strongest product lines over the next 3 years. So they expect to make some improvements. They also hired JP Morgan to take a look at their business, which may create some value for shareholders. Plus, as I said, last year they have a loss of over 1 billion. And that happened because of an impairment, which was around 2.2 billion. If you eliminate this impairment, their earnings would have been better. In 2021, they made over 200 million profits, and in 2020, over 300 million. Now, another thing you should know is the number of shares. As you can see, in 2020, they had 100 million shares, and now they have over 200 million. So this is high dilution. The number of shares have more than doubled. And that happened because they merged with another company, DuPont. And that merger was completed in exchange for 141 million new shares. So IFF issued over 100 million shares to merge with DuPont. And that's why you see this massive dilution. And this is another reason why the stock price has declined so much, over 50%. Moreover, they will continue to pay their dividends. The next payment will be in October, but we have to be aware because their free cash flow was quite low. In the first quarter, they had a loss of 48 million, and in the second quarter, their free cash flow was 85 million. Now, as the analysts expect around 900 million free cash flow, that may not happen. And if their free cash flow is lower, then their dividend will be affected because they won't have enough money to pay that huge dividend. That's why it's expected this decrease in 2023. So this dividend may be affected in the short term, till they turn this business around. Of course, if the dividend is reduced, then also the stock price will decline even more. And that might be a better opportunity to invest in this company if you like it. Plus, their outlook is expected to be even lower than their previous numbers. They expect around 11 billion in revenue. So this is a minus. And also their volume is expected to be down. So they are facing more problems. And that's why the stock price is down so much. Of course, if they can improve their business, the stock price will rebound. Now, let's see their fair value. First, the risk. If their profits don't grow more in the future, their growth rate is flat, then the risk is that the fair value may be around 10 billion. And the market cap is around 17 billion at the current level. So, you can expect another decline in the stock price if their growth rate stops. As the revenue have declined so much, around 11% this quarter, you might see new declines in the stock price. So you have to be aware of this risk. Of course, in the long term, the stock price may rebound if they can improve their business. So you have to be aware of the risk. Now the upside, the great scenario, if they keep growing in the future, they deliver what the market expects, then the fair value will be around 19 billion. And at the current level, the stock price is a little bit undervalued. The fair value per share will be around $75 and the stock price is around $69. So in international flavors, it might be a good investment at the current level if they improve their business in the future. Now the normal case, where they may grow a little, the fair value will be around 14 billion for a 10% annual return. So based on this scenario, the stock price is overvalued at current level. If you want to invest with a margin of safety, then focus on this scenario. Of course, you also have to be aware of the risk, because if bad things happen, then the stock price can decline even more. So international flavors and fragrances is a stable business. They are paying a nice dividend, and they expect to turn this business around to improve their earnings and revenue in the future. But what I don't like is their style of growing. They grow by acquisitions, and they pay too much for them. That's why they had that impairment last year. And as they're paying for acquisitions by issuing new shares, that will be a problem for shareholders. I mean the current shareholders, because we have that risk of dilution, and you don't want that. Of course, if they can integrate their acquisitions and get more efficient, then they may make more profits in the future, as the analysts expect over 1 billion in their earnings, and also in free cash flow. So if you can trust their management, what they're doing, the stock price may be a good investment at the current level. But don't forget the risk and always invest with a margin of safety. At the current level, this business is not a great investment for me. For others, may be a good opportunity. And if you have any questions, please let me know in the comments.